price goes higher and stablecoin market gets bigger, and then those stablecoins need to buy Treasury bills. Well, that's all good for the U.S. government. So, and Basant knows that. They from back channels, what I've heard, they get it. And so this is really, really positive. And now, does it manifest in the price immediately? No, the price is down right now. I mean, it's like so many Wall Street things, it's kind of buy the rumor and sell the news. And, we bought the rumor, got to 106, and of course now the news is getting sold. And, I think it's more what's going on right now. I think it's more actually liquidity driven, just that, the world is kind of turning risk off on the overall stock market because the economy appears to be rolling over, and all these tariffs and all the things Trump has made it clear he's going to disrupt things. He's going to break things, as necessary. And one could argue that he's trying to break the stock market in order to help the bond market, because they've got a lot of debt to roll over, and it's a problem. So it's an interesting time, I'll tell you that. I mean, there's going to be more going on in this monetary stuff the next 5 years than there has been in the last 20. We're really in for a lot of change, in my opinion.
A lot of change is an understatement. It's almost hard to unpack what's going on a week-to-week basis with all the monetary changes. You mentioned Treasury bills. That's always kind of been the underpinning at the global level for all these nation states to get exposure to, our economic powerhouse. Interest rates are stagnant right now. I think the Fed put a pause on them earlier this quarter. They're talking about maybe potentially lowering them into Q2. But Treasury bills are in question, largely due to actions driven by the previous administration and, Russia and the Ukraine war. I think BRICS has realized that it's not the safety net that it once was, and I think they've started to look to alternative assets. To your point earlier about Trump just looking to break what he can break, why is he doing that? And why maybe the rush to signing the SBR, and how does that interplay with one another?
Well, I think the SBR, they signed it because they wanted to signal that we were going to be a leader in a crypto area. I mean, one thing that's great about the way Trump was managed into this, you recall 3 years ago, Trump hated Bitcoin, didn't really understand it. And honestly, to this day, I don't think he completely understands it, but I'm sure his advisors do. But I think what's going on here is that, he wanted to keep his promises to this group. I mean, I thought it was extremely positive, obviously, to let Ross go as he had promised. And he's a competitive guy. And I think the people who sold it to him, in my view, very smartly said, look, this is a race with China, and we don't want to let them get ahead. And he doesn't like to lose. And so that's my guess as to why he did it. I'm not sure he fully understands all the implications. I mean, I'm not sure anyone really fully understands the implications. I mean, if they do what Saylor is talking about doing, which is sell the gold used to buy Bitcoin, I mean, this is really, really a massive devaluation of the dollar. There've been mixed signals coming out of this administration. I mean, Basant has said, we want the dollar to remain the world's reserve currency, but then he's also said we need a weaker dollar, in order to balance trade. And so those two things are slightly in contrast, don't go together. But I think, the world has been unbalanced massively because of the strong dollar policy and because of the financialization of the United States. And Basant said something else I thought was very, very indicative of where they're going. And that is, Wall Street's done extremely well for the past 20 years, and Main Street hasn't done so well. And, it's Wall Street that drives the stock market. And, the people who voted Trump in, a lot of them don't own stocks. They're the working class, and they don't necessarily have enough capital to own stocks. So if the stock market goes down, that's not going to hurt them that much per se, except insofar as it then turns into a recession and they start losing their jobs. So, the problem is it's all interconnected, and the whole economy has been built upon, cheap money and puffing up asset values. And I think, they want to try and reverse that process, but I think the word I used earlier, it's going to be disruptive. It's going to be hard. And they've even come out and said that. And I think Basant also said that, it's very clear that to the degree they're going to be disruptive, they should do it right up front. Because in 2 years, the voters get another say, and in 4 years, they get another big say on, what team is going to be running the country. And so if you're going to have trouble, if you break things right now, one can argue, or he can make an argument that, hey, Biden left us with a pile of shit, and we're doing the best we can given what we were left. And hopefully then things will be looking better as the 4 years rolls around, so that JD will have a chance to win. So, there's a lot of interesting cross currents going on, but they know that we have to weaken the dollar to balance trade and really to kind of reshore manufacturing here. I mean, another, related part of all this is, it became very clear in this war that, we couldn't even build the shells we needed to supply the Ukraine for the war. And, manufacturing in the U.S. has been hollowed out, and that's got to change. And the way for that to change is a weaker dollar, so that, we basically, bring manufacturing back here and it's competitive. Now, the thing that I think most people aren't talking about, including Trump, is that tariffs and a weaker dollar also will result in domestic inflation, more domestic inflation. But hopefully, if it's domestic inflation, but everyone's fully employed, then, the two will balance out, and there'll be wage growth for those who are the workers, and, the people who will not do as well are the people who hold bonds, or the Wall Street people who've made all their money off financialization. So I think that's kind of the big picture, what they're trying to do. My partner describes that partner, Bitcoin Opportunity Fund, David Foley, said, this is brain surgery. I mean, it's going to be really hard. And, we don't really know exactly how it's going to unfold. But I think one conclusion I draw is that almost no matter how it unfolds, it's good for Bitcoin, because, it's likely to lead to some more monetary chaos. And this was the point of my book, which was that really all forms of monetary chaos, ultimately force the Federal Reserve into using the only tool they have, the only hammer they really know, which is print. So, they're going to, when things get rough, the market falls enough, the bond market, has an upheaval, enough people are laid off, people are crying for stimmy checks, whatever it might be, the solution will somehow be to print the money to solve it, versus letting a complete depression unfold and the complete collapse of the system. And therefore, that printing will be inflationary, and therefore in an inflationary environment, you want to hold assets the government can't print. And the two premier assets in that category, in that bucket, are Bitcoin and gold, in that order, with Bitcoin being better than gold, but they're both unprintable. You can't print gold. So, well, although they have paper gold, but in general, you can't print real gold.
So. Very true. No. A lot to unpack there. Yeah. So the comparison of the Trump administration performing brain surgery on the economy here to try and taper the everyday American's expectation on what they promised, right? Preventing inflation from rising, but subsequently also understanding from an economic standpoint that they have to let inflation run to let the economy grow. Right. It's a very hard dynamic to navigate. And I don't know how you position the messaging out there. And in parallel to that, right? So we just had the executive order signed, right? That's on the governmental level. We have at the corporate level, guys like Michael Saylor, who are building their own parallel Wall Street with this corporate Bitcoin Treasury strategy. I know you and your peers at the Bitcoin Opportunity Fund are also seeking companies who are adopting a similar strategy, but more specifically, companies that are, looking to bring over high performance compute, AI agents, energy markets, and that sort of thing. How does your average everyday person make any sense of this? Like, what are the key points and takeaways that they should be paying attention to?
Yeah, it's a great point. I mean, to boil it down to its simplest form, Alan, I think that what we've entered, and I think a lot of people have missed this. I think the average person, the average investor, I still encounter this a great deal, feels like stocks are the place to be. They know we live in an inflationary world, and the way you hedge that is stocks. And stocks have slightly outperformed gold over long periods of time. And stocks do represent claims on businesses that throw off, earnings and dividends. And so stocks aren't bad per se when they're appropriately priced relative to what you're buying. The problem is that the stock market right now is at, historic highs on any metric you want to use, the Buffett indicator, whatever. It looks like 2000 and 1929. And so you're not getting everyone's in that stock bet already. They've already made that bet. And so there's not, it's fully priced, in my opinion. There's not a lot of upside in it. And I think what happened in 2020 and changed is that we went from a 40-year period of deflation where, interest rates were coming down, driven by a lot of things. You read all Jeff Booth's stuff about technology and so on and so forth, and the China price. But we went from that period and it got ridiculous. I mean, we had $18 trillion of negative yielding bonds. I mean, that's about as deflationary as you can get when you have to pay somebody to hold, to hold your money. I mean, come on. So that, it was just extreme, right? I mean, the 10-year was at 50 basis points in, March of 2020. So bottom line is that reversed, in my opinion, violently, when we had the COVID event and the 40% growth in the money supply. And so, and history shows that you really can't put inflation back in the bottle very easily. That once it gets started, it kind of tends to continue because everybody wants their piece of it. I mean, a good example of this is, we're supposed to be aiming for a 2% target, right? Well, the dock workers, the longshoremen went out on strike last fall in October. They got a 6-year contract with a 60% increase in their wages. That's 10% a year for 6 years, all right? 10% a year for 6 years. So, I mean, that basically what that shows you is that when labor, and how were they able to get that? They were able to get that, one, because they had a union, a lot of power. They fought all the automation of the ports, etc. But more importantly, they had just been screwed. I mean, they'd had a 40% increase in the money supply. And so suddenly whatever they were making bought 40% less goods and services. And so they were pissed, and they had the power, and they went and they demanded this higher rate. Well, okay, that higher rate, fine, they get it, and I get it. I get why they got it. But the point is, that's going to flow through to every single piece of goods and services that comes through those ports. And it's locked in for 6 years. So, and 10% is a long way from 2%, the 10% annual increase they got. So the point is, we live in an inflationary environment now, in my opinion. And because of the math, and I've laid this out in detail in my book, and it, and Lynn Alden has done a great job laying it out as well, with her "nothing stops this train" meme on how the government spending is out of control. We can get to Doge in a minute, but, because of the math, they really have to keep the system inflated and inflating, or else it collapses. I mean, it's like, inflate or die is kind of the mantra. Richard Russell used to say that. So as a result of that, I mean, for the average person listening to all this, you don't have to get all the detail and all the color that I'm giving you. What you just need to understand is that we do live in an inflationary environment now. It's likely to persist for at least 10 years or until we address the problem seriously. And therefore, what people need to do to protect themselves is to invest in or buy or be exposed to things that the government can't inflate. And the best one is Bitcoin. The second best one is gold. So, that's really kind of the easy, summary bottom line. There's a lot more behind that. And by the way, how we get from here to there, it's going to be messy. I mean, Bitcoin could go to 140. It could come back to 70. I mean, these are volatile assets. And, history shows in changing monetary systems like what we're going through right now, you've got to know what you're doing. You've got to have conviction because there will be volatility.